Hi, I'm Todd. I'm the CEO of Divido. So the buy now, pay later space has been really very dominated over the last 10 years by what we call buy now, pay later version 1. And effectively it is companies who are not offering lending. They're offering a deferred payment product, 0% interest and under 12 months payback. And effectively what they've done is exploited a loophole in regulation, which the government in the UK, but also around the world, are now looking to crack down on, because they're worried that, especially in difficult times, consumers are likely to get into financial difficulties because they're being given loans that are unaffordable. So a consumer could go into 10 websites in half an hour, take out 10 loans and get themselves into massive debt and trouble. And so there's a big regulatory shift now to crack down on that and make sure that the firms lending at checkout have strong regulatory controls in place. They understand the affordability of their customers. They know who their customers are, so they know they're not fraudulent, and they're lending responsibly to those customers who are able to pay back in the short to medium term. So at Divido, we're building a retail finance network, and we're bringing together some of the most reputable brands in the industry. So we bring together large global banks like HSBC and Nordea and ING. We bring together large payment service providers. We bring together large retailers, all to create an ecosystem to create lending at the point of checkout for consumers. Because consumers need to be able to borrow money, right? You know, it's the way consumers behave has evolved over the last 5 to 10 years. And whereas older generations would have taken out a loan or put something on credit card, younger generations are increasingly preferring to put something on retail finance at the point of checkout, and they want to take their lending at the right time. And so we believe that there's a really important space for regulated companies to come in and provide strongly regulated, responsible lending products to consumers at the point of sale, and for the important things in life, not for if you're buying, I don't know, a pair of a dress for your date on Saturday night, but like if you're buying a new kitchen, or you're buying a bike for your family, or if you're buying a new laptop to study for your degree. We think the important things in life you need to be there for, and that's where regulated lending products really come in. So obviously, look, interest rates are the highest they've been for over a decade, and that's creating a very different funding scenario now. And I think what it's doing is a couple of things. So first of all, this plays straight into bank strengths, because banks they have deposits and they're able to lend out much more affordably than those institutions who have to borrow money to then lend out again. So I think that's one very important trend. The second thing is, as interest rates rise, it puts pressure on retailers who kind of caught between cost of living on one side and their customers haven't got so much money. When they want to offer finance at checkout, it becomes more expensive for them. And so it's really important that we help retailers smooth that journey and provide the right solutions to their customers at checkout. But at the same time, they can help protect themselves in what's one of the most difficult trading environments for a generation. And then I think the third thing is there's this big move from who owns the customer. With the rise of things like super apps, increasingly you're seeing some of the buy now, pay later firms looking to take the consumer and have a primary relationship, whereas in the past they were serving merchants who looks after those customers. And again, it's a big pressure on merchants right now, which we're trying to help merchants solve for, where they can white label products and they can own the customer's data, they can own the branding, but at the same time make sure it's a responsible lending solution for their customers on their platforms.